All right, let's get right into it. We're about to unpack a pretty fundamental shift in how you can invest in high-value property right here in India. And believe me, this is a change that could totally redefine what it even means to be a real estate investor.
I mean, seriously, think about it. Have you ever walked past one of those gleaming glass skyscrapers, or maybe a fancy resort, and just thought to yourself, man, I wish I could own a piece of that? It's a dream for so many of us, right? The idea of owning a slice of some premium income-generating property.
But, and here's the catch, right? For most of us, that's kind of where the dream stops. The price tag has always been this huge wall, this massive barrier to entry. Well, what if I told you that's changing? What if that wall was about to come crashing down?
Because that is exactly what's happening. We are literally in the early days of a real estate revolution, and it's all being driven by a whole new way of thinking about owning property.
So let's just break it down. The old way versus the new way. You know the old drill. Investing in prime real estate meant you needed a ton of capital, your money was basically locked up for years, and let's be honest, it was pretty much an exclusive club for the ultra-rich. Well, this new model, it completely flips the script. We're talking accessible, we're talking liquid, and way, way more democratic.
So, the big question is, how is this all happening? Well, the key to this whole revolution is a powerful new financial tool. It's called an REIT, and we're about to break down exactly what that is.
Okay, so an REIT, that stands for Small and Medium Real Estate Investment Trust. And what it is, really, is a company that owns and manages properties that generate income. But here's the magic part. It's all regulated by SEBI, and you can buy and sell shares of this company, which represent actual ownership in those buildings, just like you would any other stock, right on the stock exchange.
The way it works is actually pretty brilliant in its simplicity. Step 1, a high-value property, say an office building, gets acquired. Step 2, the ownership of that building gets divided up into thousands of tiny, tradable units or shares. And then Step 3, you, the investor, can buy and sell those units on a stock exchange just as easily as you trade a stock. It's that simple.
And this new framework from SEBI is the real game changer here. For starters, the minimum investment is down to a much more manageable 10 to 25 lakhs. But maybe the biggest deal is that it solves the age-old exit problem, liquidity. Because these units have to be listed on an exchange. You're not stuck anymore. You can actually sell your shares when you need to. And we're already seeing the big players like PropShare and Strata jumping on board and listing their own schemes. Okay, let's talk about the scale of this thing. Because this isn't some small niche market we're talking about. This is a billion-dollar opportunity. And frankly, the numbers are pretty staggering.
So, as of right now, in 2024, the market for this kind of fractional ownership is sitting at about $500 million. A solid start, for sure.
But just look at where it's going. The projection. By 2030, this market is expected to explode to over $5 billion. That is a 10 times increase in just a handful of years. That's a massive wave of capital that's going to completely reshape the entire landscape.
So, what's in it for you, the investor? Let's talk returns. Just from the rental income alone, you're looking at an annual yield of somewhere between 8 and 10%. Pretty good, right? But that's only part of the picture. When you add in the potential for the property's value to go up over time, the appreciation, the total return, or IRR, is projected to be in the much healthier range of 12 to 18%.
And look, don't make the mistake of thinking this is all just about shiny office buildings in big cities. Oh no, this revolution is spreading out across a whole bunch of different real estate sectors.
Sure, commercial office space is still that stable blue-chip option. But the real growth story? That's happening in places like warehousing, which is just getting supercharged by the whole e-commerce boom and the China Plus One strategy. Then you've got hospitality, which is blowing up thanks to new trends like workations and creating all this demand for fractional ownership of holiday homes. And get this, even agricultural land is popping up as a cool new asset class for people thinking long-term. And just when you thought that was cool enough, there's another whole layer of innovation on the way. The next evolution of this market is happening on the blockchain.
Yeah, we're talking about tokenization. It basically takes everything we've just discussed and puts it on steroids, making it faster and way more efficient. So forget slow manual sales. Think instant trading on digital exchanges. Forget manual rent checks. Think automated payouts using smart contracts. And instead of a dusty paper deed, your proof of ownership is locked in, secure and verifiable on-chain.
So what this all boils down to is 3 huge benefits. 1, you get real-time liquidity, just like with stocks. 2, rental payouts are automated.
And 3, and this is probably the most important part, you get verifiable proof that your digital token is backed by a real physical asset. It's all about bringing maximum trust and efficiency into this market.
Okay, so with all this massive opportunity on the table, it's absolutely crucial to be a smart investor. And that means you have to understand not just the incredible potential, but also the risks involved.
Look, no investment is a sure thing, right? Real estate is still tied to the ups and downs of the economy. Plus, not every platform out there is going to survive the new regulatory costs. We'll probably see some consolidation. And there's been a recent tax change, meaning that income you get is now taxable, and that's definitely going to affect your bottom line. You've got to be aware of these things going in.
In this quote right here, it just perfectly captures the new way of thinking. The focus is shifting from simply owning property to owning yield. See, the winning strategy isn't about putting all your eggs in one basket anymore. It's about building a diversified portfolio of assets that all generate income. It's about owning the cash flow, the yield, from a whole mix of properties.
And that really brings us to the final and most important question. What we're seeing here isn't just another trend, it's a deep structural change in one of the biggest asset classes on the planet. So, as you think about your own investments, your own financial future, you have to ask yourself, is your portfolio ready for this shift?